Good day, traders. I trust you are well. This is Dow Jones 30. I don't trade this market, but one of my clients, coaching clients, does, and they took a trade later on in the day. And I thought I'd use this chart for, just this presentation, just show you some things that bring together everything that we are talking about. As craftsmen, the whole issue is us becoming craftsmen traders. In other words, whatever the market throws at us in terms of price action, we ought to have the ability to actually trade it. Now, what that means is the strategies that I've taught you can appear in any way, any order, any format, any time on any chart. Now, you need to have the ability to interpret it and trade it as it unfolds. And that's the reason that I encourage you to build up your own PowerPoint slides. Just the PowerPoint slides that I use in my course. And I encourage you to do that, because then you start to personalize, internalize the strategies that I have. And all those PowerPoint slides are really taking the strategies that I've taught you, opening charts like this, finding out where the market has moved and saying, well, what has taken place? Because that's how you begin to internalize it. Then you start to document for yourself how you actually trade. How you actually trade is you being a craftsman. My craftsmanship is different to yours. Same strategies, but it then takes into account our trader psychology and the whole energy I bring to the market on a particular day, and how I respond to it. So I personalize it. So I encourage you, go back to the strategies, study them, understand them, then go into your charts and start to create PowerPoint slides. Now, all you do, for example, if you were in this chart, once you have things marked up, just do a right click, you go to save as picture, and under save as picture, you can save active chart as is alone. If you just tick that on its own, it's going to save it on your desktop somewhere, and you'll see where that is. From that desktop, you copy it, put it into PowerPoint so that you can make notes on it. You could also, save active chart as is and just post image online MQL, post it on MQL online, then you've got to take it from there and onto your own slides. I don't use that often because sometimes, it just bombs out, it doesn't do it. But save it on the desktop and then copy it onto your slides. Then from your slides, you build your own PowerPoints. Now, I've told you I've got over 10,000 PowerPoint slides, but I always work on the latest 2,000 or the most clear, because things get clearer and clearer. So the latest 2,000 kind of give me a structure in terms of what I am looking to trade. Now, when I say the latest 2,000 slides, if I was to break that down into a day, it's probably divide that by, say, 10. So it's 200 days, which is almost like a year of trading. But then out of that, I will find different strategies. So out of a day, there might be 10 different things. So multiply by 10, I get 2,000 slides. Get the sense? Okay. All right. So that's homework for you to do. Now let's go through this pretty quickly. We have spoken of breakouts. I mean, this is a gift, right? If you're trading the Asian session, now remember, it doesn't matter what time you have to trade. Get up, find a slot that you consistently trade. Trade around work. If you're going to work, trade during the day. If you're trading during the day, I trade the 5-minute charts, and that's what because I got the whole day to trade. So you got to find it, but you got to be consistent. One of the traders I was talking to going forward, they're only going to trade in their time zone the last 3 hours of the US session. And I said, do that consistently, Monday to Thursday, every day of the month, and you start to get results because the market is consistently moving, just don't know when. Beautiful reward for the Asian session. And I mean, if I got this, I'll be smiling in the sessions that I trade, London session. So, breakout, you got to just buy, right? You put your stop down here, you can buy any breakout. It's beautiful. There's no pullback. Just keep buying all the way up, and make sure, if you're not clear about where to put the stop, right? If you're buying the breakout, stop is always at the low. Stop is always the low. But the higher you go, you can use the measured move stop of a particular candle. There's a measured move stop. Then you look to the left. There's a level here, so you put it below here. You don't put stops in the middle of candles. Okay, but whatever time come the market, when you see that buy, measured move stop is the absolute minimum you gotta use, guys, or way down here. Don't put a stop beneath the candle because you can just get spiked out. That's pretty boring because the market keeps going up. So beautiful bull breakout, got into a trading range. This trading range has got a convergent triangle within it. Try to break out above that, and the bulls fail. So you'd have bought, and at some point you've been trading your stop, probably have been stopped out here, or just got out in this reversal. Absolutely fantastic, buying all the way up. If you flip through your charts and you see this kind of structure anyway, look to the left and say, what did I have? So assume it didn't have the beginning of the day, and this was happening somewhere in the middle of the day. When I get to the beginning of the day, I just ignore what happened. I'm only interested in the high of yesterday, low of yesterday, right? This blue line marks the low of the day going forward. So if this wasn't here and it's the middle of the day, you look into the left. Okay, we're breaking out above that trading range. We're breaking out above that, breaking out above that. At the very late, it's going to be buying here. Okay, if you're in the middle of the day, but at the open, I just jump in and just start to trade. Open of the day. So then we got, went into a trading range, no breakouts for us to trade here. Another trading range, bears didn't give you sufficient reason to jump into any trades there. There's no reason for you to jump into a trade. It's not a good enough breakout above the trading range. But in any case, if you thought, well, I'm going to buy, if you buy that, your stop is going to be at the bottom here. And, you probably get out break even, if you did that. So, if you take a trade and you realize you make a mistake, tighten your stop, get stopped out. That is perfectly fine. Don't mourn and grump about it. It's not going to help anyone. Tight trading range, bulls didn't break out, bears didn't break out. So nothing for us to do since this beautiful bull trend. Up here, that was the high of the day at that point. Okay, so you're getting into the early hours of the London session. This is the end of the Asian session. High of the day at that stage. Tight trading range, tried to break out, double top failed. So now we have a wedge top 1, 2, 3. This tight trading range has also got a wedge 1, 2, 3. So nested wedges, I've told you about those patterns. There's a wedge 1, 2, 3. There's a bigger wedge 1, 2, 3. There's a wedge in top here 1, 2, 3. 3 attempts to do something and failed. So when the bears start to accelerate down, that's good for the bears, at least to see if they can test here. So, if you want to get in and sell beneath that, you can. Remember, you always have to be clear where your stop is and, have at least 1 times minimum reward risk to get to a level of support. So if you're taking that with a stop there, you barely can get there, but you can take that, tighten your stop, manage your stop, pull your stop down, because you get into a level, so the market might turn, right? Put your stop here as it trails down, get stopped out, a little bit of profit. If you didn't take that because you're pretty close to the 1-to-1, that's also a good decision. Then you wait. So now we have this nested top here, beautiful for the bears, good bear breakout. Let's see if the bears are stronger. They create a lower high. You can jump to that because we didn't get a breakout here for us to trade. So we wait. Bulls have to get above here and above here before we buy. But to get another little wedge, 1, 2, 3, wedge testing a lower high, pretty strong for the bears. If they're strong enough to sell off, you must try and sell. So there is a sell. There is a key level down here. Put it here. That's the actual low, of since the morning session or since the London session opened. That's the low we're looking at. There's still a low of the day way down here. So if you want to take it, you say, okay, I can see the lower highs, I can see the bear strength, and now I am down here. I want to, sell here. Let's see if I've got at least 1-to-1. If you've got a 1-to-1, you can take that, get acceleration down, start to go sideways, pull your stop down to the midpoint. 50% of any breakout is a pretty good place. Pull your stop down to the midpoint of this breakout and hold it. If it fails and comes back, you get stopped out, but you might get rewarded and get this fantastic reward. That's pretty good. So a client I was coaching got in here, got a beautiful trade out of that tight trading range. And now you're trying to see if, and again, there's no more clutter here. We're way past the Asian Open. All of this is the bears taking control. So though you got levels to the left, they're not as important as the low of the day down here. So get a breakout. Do you take that trade? I don't like the tail, but you could take that, put your stop above here and manage it, or wait for any of the breakouts beneath here and take a trade. So if you took the trade here, stop here, measured move here, you go to 1-to-1. You don't have to take, unless you're going away, just hold on to the trade and see how much more you got. If you didn't take any of that, you could also take that. If you take that, your stop is up there. That's the most conservative stop up there. Get to 1-to-1. You could also use a stop just above the breakout. There's a breakout level to the left. Is that you could use that. Get into this trade range. You go to 1-to-1. If you held onto your trade from there, man, beautiful reward. Tight trading range, breakout, you take it. Your stop is above here. Pull back, hold onto it. Okay, if you get stopped out, that's fine. If it starts to pull back and you're concerned about it, once you see that, you can put your stop above here, and it might get stopped out or it might not. Eventually, the market carried on until we go to test the low of the day, which was that low of the day was a breakout we have here on the Asian session. All right, so quite a lot of things that took place in here. Buying all the way up here, waiting all the way up here. Some opportunities to buy if you can manage your stop pretty tightly. Selling all the way down. Beautiful day. Whether trade the Asian session, late Asian session, early London session, not much, but late, middle of the day in London all the way to almost the open of the US session. Good opportunities. All right, guys, I hope you enjoy that. Now you got to do the work, build up your own PowerPoint slides, bring everything together. These opportunities will come and let's trade them and make money out of them. Take care, guys. Name is George Nyabadza. I shall catch up with you again. Bye-bye.